All right, hey traders, this is Christian from Tribeca Trade Group, and it is Thursday, November 7th. I've got booking up. Let's start there. We'll start with some earnings names. Again, it's a lot of names out of reporting earnings. It feels like we're sort of getting to the tail end of earnings season, but not quite there yet. But still, a lot of names that are reporting. So booking, I thought this was a really good opportunity. This sold off hard with the sympathy moves of what happened with TripAdvisor as well as Expedia. So I went long this one. I actually had two different trades on because again, it's rare when I really like a name for earnings. So I talked about this in the midday video. I kind of sent out. I had a meeting today, so I was out of the office for a little bit. But before I left, I sent a video out on earnings and just what the market was doing. But I sold the put spread, and then I also have a call spread here, which was a little bit more than I usually risk, even though it's only a one lot. But I just don't really like to risk that much for earnings. So as long as I'm above 1920, a little bit difficult. Normally, if I was just outright a call, which I think booking is the calls are just too expensive. But if I was outright a call, I would be hedging here. But I'm in a call spread. So if it happens to go up a little bit more, the problem is you can't hedge a call spread by selling stock because you're limited to your upside. So if it happens to go like and blast up through to this VPOC and you sell stock, well, you're capped on your gain in your call spread, right? So I can only make 850 minus the width of the spread, which is actually this was very close to the money. I usually have a different ratio. I usually like to stay under $4 for a $10 wide spread, and this one I actually spent more than that, 850 for a $20 one. So if it closes above 1920, I'll earn 1150, which is nice. But I can't hedge because I can only make 1150, right? And the other thing I did was sell a put spread, which I mentioned that I actually like this trade better for the risk reward after this thing sold off. But I was trying to read as much as I could about Expedia and TripAdvisor, and the one thing that I read with Expedia was a lot of the disappointment wasn't necessary. Well, it was twofold. It was one about Google kind of taking some market share with their search and with what Google is doing. But it was also about some of their other ventures that they're doing that Booking is not involved in. So for Booking to go down as much as it was, 8%, it just looked like it was a nice opportunity. So other names that reported, Disney, what I talked about in the earnings video that I sent earlier is that there was a lot of call positioning both in today, and I think we saw this a couple days ago, some calls. So it looks like they were onto something. And really an outsized move for Disney on earnings, because if you look, which we talked about, it doesn't normally move that much, and it doesn't have a great history to it. It usually moves like 2%. So what is this thing up to? I'm just going to do this calculation really quick because I'm interested in this. 133, 140. Sometimes the market makers have it right. It's about a six. Is that right? 6% move. 5.6% move. So yeah, right now they're this is a bigger move than the market makers were expecting. So well played if you went long this one. And here's another interesting thing that I was just talking to. I was on the Cheddar Network right after the close talking about this, but these gaming stocks, since they have broken down, they just cannot gain a foothold. Uh, you know, they seem to move together. Somebody asked me on Twitter what was my opinion on EA, and I said this EA is it's stuck in the mud. It 102 would be the level to watch in EA, and it just can't get there. Failed here, failed here, failed here, failed here, and is not even there. ATVI is another situation. Remember, they had their investor day, I believe it was, and they introduced a couple of new games, and it started to rally and basically failed on that. I'm sorry, that's the wrong chart. Let's go to the weekly. Right here, it tried to go higher and failed. I don't like when stocks do that. That's why I said I was not playing this one. for earnings. They're not taking any significant position in it. Take two is usually the better of the three on earnings, and this is even down. So, kind of weird. Here's another one. Again, these are all things. Sometimes if I can at least help you avoid a trade. So what I talked about in the earnings video that I sent out earlier, I, I said TDD is going to have to knock the the ball off the cover for if you look at how they've moved on other earnings reports, they're a big mover. But no one seems to want any part of software right now, and especially high growth. So they had good numbers. 75 cents versus 67, 164 versus 163. The fourth quarter revenue forecast. This is ahead of expectations. So this is the problem, right? This I would say is a good quarter, but if these software names are not shooting lights out on earnings, this is what's going on right now. There is not a thirst. But Disney, on the other hand, right, the value names, and I would consider Disney more value. There's more of an appetite for these, so this will continue for. We'll see how long it goes, but clearly that has been the story of the last couple weeks, and it's been miraculous, right? And so I've talked about this enough. Do I want to talk about this again? I would say just keep in mind with the software stuff. I'm sorry, with the value plays. I think it will depend on the trade headlines, which I'll get into in a minute, which we got more of those today. But I think you have to look at when I bring this value versus growth chart in here, which again I've been talking to death about this. I don't even want to talk about this anymore. But you can see. So this is a question of I think a reversion to the mean that's going on. Look at this little rally that we've seen in value versus growth over the last couple weeks. Look at how much over time growth has outperformed, right? Value is in the numerator, growth is in the denominator. So if you are still looking at growth names, they will probably eventually have their day, but it may not be yet because this is still like it kind of looks like a blip on the screen for how much value has been going. So the reason why I put this chart up going all the way back to 2006, it should give you a little bit of a frame of reference how much growth names have outperformed, right? The spread, people do look at the spread of how one area outperforms to the other, and if it gets way too far out in front of the other one, you see what we're seeing right now, right? So again, this has been going on for a good couple of weeks, since more than that, excuse me. It's been since the end of August, right? And it's kind of gone in stages, right? A little bit higher here, growth outperformed for a little bit, but you can see we're pushing to the 200, 200-day moving average in this, right? And that goes along the same things along with international versus the U.S., right? These spreads got way too far, pushed in one direction, and that also goes with. Let's look at the last one, and then we'll talk about today's market action. But if you look at SPHB, right, so this is high beta versus low beta. And you can see it's the same type of relationship. People are going into higher beta names, even though some of these higher beta names are not full-on growth. And they're dumping things like utilities. All right, so let's jump into that. Let's talk about the market moves for the day. But again, these relationships are important because if they get too stretched in one direction. So what happened today? So we got positive headlines, and then we got a little denial of the headlines that the U.S. may not want to roll back the tariffs until phase one is signed, right? So it's a little bit of I don't know, miscommunication or jumping the gun a little bit. And bonds sold off a lot. Gold, obviously. So part of those defense areas where there's been a lot of money that's been held up in these areas, is now starting to see an unwind. And I think this, you could see how it's been working. The more that they talk about the likelihood of a trade deal getting done, the more the safety areas sell off, and more of kind of these value plays, these under-owned plays, have been doing. You could see there was not good breadth today after the open, right? Of course. So where did we finish on the day? SPY finished up just 36 basis points, but down from the open. Qs, and again, part of this was that headline that happened around like 2:30 or something like that. The Qs, uh, the diamonds were the best performer, which I've talked about in an earlier video this week, that they were probably the next area to outperform. Small caps, you can see I've got highlighted here, where it got hit the hardest at the end of the day. I highlight Chinese internets. They went up after the open. They finished up 2.4%. So again, this is just percentage change from the open, but you can see a lot of names gave back a lot. The home builders are interest rate sensitive, not good when interest rates go up. You kind of see what's going on there. All right, so those are some of the movers. And also, if we look at breadth, if we slice it this way, it's NASDAQ, you could see, had almost as many decliners as there were gainers on the day. So not really strong. So breadth really didn't confirm today's move. So it kind of feels like, and so how did I play this today? And I'll show you my notes on the day. But if we go to trades, I went long Baidu for earnings, so that worked really well. We had some lotto calls in Macy's that worked. Beyond, which I'm synthetically short, took a target there. And then I started to say, right around 12 o'clock, I put on I sold a call spread in the SPX that expires tomorrow. I said just a little hedge, because I think we've kind of run our course for the week, right? We're seeing some things like the put call ratio kind of get into danger zone, right? I was making a joke earlier that there wasn't. I showed a picture of a tumbleweed live feed of put call buying, right? So people use these as contrarian, right? So the put call ratio was around like 0.6. That is really, really on the bullish side. So if you're using this as a contrarian, that's a warning signal, right? That you should be picking up on, and it's something that we talked about in the room. You have to be really careful when the put call ratio gets that skewed to one side. Now, it was like this a couple days ago, and then with the market choppy, it kind of cooled off. We saw some more put buying. What was it yesterday? The put call ratio. Let's see if I have this here. Yeah, so it increased. So it got pretty negative here, and then it pulled back up a little bit. So again, something to be mindful of when that happens. Note that this is not updated for today, but just be cognizant of when the put call ratio gets very skewed to the other side. Of course, everybody looking at their fear and greed index in extreme fear. So you really have to be careful. Like, I participated in a couple things today. Like, I bought FCX. Because I think that if copper continues to run, you might see a really decent sized move. And I broke this chart down. If we could maintain, and funny because we didn't close above this virgin point of control, but I think it's worth a shot. And again, that's why I only went in. What did I see? And basically the comments that I made on private Twitter was that I hate starting positions when we are this overbought, when the put call ratio is doing this. So it has to be really something interesting, and something maybe like the last leg of the value. I don't want to say last leg, but maybe the next area that outperforms is this group. All right, so then I was able to get out of this short SPX spread. And again, kind of forced the target there in EEM calls. I did manage to hit one target in FCX. But basically, watch how I think we are due for, I think a lot of people realize this, that we're probably due for a little bit of a breather. watch what happens on these days where we do have a little bit of a breather, right? Notice we have not, now I'm not getting super like bearish here. The trend, we're still maintaining above the 5 period moving average. So I would say stick with it. I'm pairing off risk every time we rally like this in the morning. And then I kind of look to regroup, on the days where it's a little bit choppy. But I would pay attention to what happens if we do start the day down. I think what was kind of convincing to me the last couple of days, the days where we had the chop, was that people want to buy these dips, even though we didn't really get one. That may be something that we see more of. And I would say pay attention to the days where, which we haven't had in a while, where we start the day like down, 30 basis points, a 0.5%, maybe even more. Because I think those dips are going to be are going to be bought now. I don't know if we are going to see that 2% pullback, because I think people have missed out in this rally and they've got to play a little bit of catch up. All right, guys. So that's it for today's video. Have a great night. See you tomorrow.